What's going on, family? Welcome back to the channel. Thank you so much for being here. My name is Dr. Brian. And in this market analysis, we're going to make sure that this particular week, the last week of February, we are fully prepared and well equipped to tackle this market, both long-term investing and short-term investing. And my short-term investing strategy here is more so on the option side and the buying option side. So whether you're a beginner, whether you're advanced, intermediary, hopefully you gain value from this particular analysis. And what we'll do first is the sponsor of this particular video is going to be Leverage Club. So let's pull this up. Leverage Club is our Discord. It is the life transformation business financial hub for thought leaders like yourself. If you're interested in that, we'd love to have you inside. And in this particular market analysis, we have what we call our trading floor. So if you'd like to join us in our trading floor here, we'd love to have you, where we have our full trainings and we have our financial news, our economic calendar, our earnings calendar. And we have, for those that are wanting to get started in options, we do have signals, but I know a lot of people have signals and I want to earn your trust. So what do we do here? We make sure that we educate. So we have our university where all of our trainings are, and we're continuously adding to those. So all that being said, there's a trial link down below. We'd love to have you inside. And that being said, let's jump right into our full analysis. As always, like I say in here, let me get my big head out of the way and let's jump into it. So how we go over our market analysis here in this community and space and channel is we make sure that we separate our fundamental analysis with our technical analysis. Fundamental meaning news, technical meaning charts. All right. So as far as our review of this particular week, the last 5 days or last week, we have our S&P 500, our NASDAQ, our Dow Jones, and our Russell 2000. All of these are up for the last week, other than Russell 2000, which we had slightly down. Now, this could be a good sentiment here because you'll see as we move along in this market analysis that we may have a potential shift in where big money is moving. All right. So I want to make sure that you see this here. So when we go over into our technical analysis, we can see the correlation. All right. So we can see here that slightly our NASDAQ is a little bit weaker than the S&P. We have finance and we do have retail, as well as our airlines that are very strong, especially leading up into the summertime. Finance is very strong with interest rates still looming about where they might be. So we shall see as we go along this journey together. All right. So we had that analysis. Let's jump into our economic calendar. Our economic calendar for the week. All right. We do have some major data this week, starting more so on Wednesday, going into Thursday, with GDP coming in at 8:30 Eastern Standard Time before the market opens, about an hour before. So we should get a lot of volatility and good news data about which direction we are headed. This is inflation data for those that are fairly new. So we're still looming about where the Fed is going to increase rates, pause them. We're going to have more rate hikes. We're just kind of in this limbo. And also, we're very bullish in our market. So it's very pivotal. NVIDIA last week had their earnings, which kept some hope in the market because we were headed in that reverse direction. So we shall see this week again. All right. Thursday, we have PCE coming in before the market opens as well, pending home sales. And we have a lot of Fed speakers coming in during the week too. Now, the Fed speakers are going to be very pivotal because they're going to be giving somewhat of a sentiment about how this data could be affecting their decision going into our FOMC meeting in the middle of March. Okay. So we're about a couple of weeks away from that interest rate decision meeting that we have high hopes about, or that may not come in as good as expected. Okay. So there is our economic calendar, very heavy week here. And we can see here from next week going into March, non-farm payrolls. Yeah, pretty big next couple of weeks coming in here. So we should have a sentiment about which direction we are going. And I do have my predictions, right? Obviously, not financial advice up in here, as we're just giving information for you to do your own due diligence. So make sure that you are doing that as you listen to this information. All right. Let's jump into our earnings report. We're still in earnings season. Okay. We have some earnings that I really do like on this chart here. Zoom coming in, Berkshire Hathaway, Big Warren coming in pretty strong to start off the week. Personally, I think they kill it. He's holding on to a lot of cash, as the news has been stating. And that is something to pay attention to, that we'll talk about why big investors are holding on to their cash flow and what is looming potentially from a positive sentiment, not a recessionary sentiment or anything of that nature, but very positive about what could potentially come, which would create a buying opportunity for many of us as the market has just been absolutely ripping. Okay. So we have Zoom here that I'll be taking a look at this week. Kava is very interesting. They've been really looking really, really good as the next Chipotle, so to speak, as a Mediterranean food restaurant right there. The big earnings that are coming in on Wednesday and Thursday. Wednesday afternoon, we have Marathon or Mara, associated with Bitcoin mining companies, Snowflake, all right, in the cloud computing and software, Salesforce, really big, C3 AI has been having a lot of sentiment around it about which way it's going to go or not, being in the AI space. These two right here are kind of our secret weapons. Some of you may have already been doing your due diligence on, but I really do like these. We've been mentioning some kind of speculative, under the radar plays, and Okta and Ionic could be some of those this week. Before before open on Wednesday, we have Novavax in the healthcare space, TJ Maxx, which I think will absolutely kill it from all the retail sector just booming from Q4 earnings in the holiday season. And then finally, leading off the week strong, we have Celsius, which has been really, really nice as of late. And SoundHound and Zscaler, these two right here. All right. So pretty heavy data, earnings week ahead, which I do like. A lot of plays for reverse earnings plays after they report, and also for potential lottos inside of our community, where we put very calculated risk plays or trades in before earnings report. All right. So make sure you do your due diligence on what a lotto is when you're putting those in, but the gold standard is to trade after earnings reports. Okay. All right. Let's jump into our fear and greed index. Okay, fear and greed index. We're sitting in extreme greed here. I know this sentiment here. Let's jump into our CNN fear and greed index marker here. All right, let's jump back. And we have here, we're sitting in extreme greed at 78 with our stock market. So again, as a reminder for all of my market analysis, I make sure that people understand. Okay, let me put me back up there. I make sure people understand that it's important to understand the emotional roller coaster of investing, that you have your emotions intact, that we are buying based off of emotions a lot of times for retail investors, but we have to think logically as well with strategy. So we see here that our fear and greed index, again, has risen all the way to 78 and 80, even touched back in July of 2023. And then we came back down to 29 into the fear range. And I think even we touched into the teens. It doesn't show it here, but I do believe we touched into like 17 at the lowest point here back in 2023. So you see we're consolidating in this, extreme greed and greed factor, where the market still wants to hold up. But again, what did I mention before? That catalyst, right? What is going to be that catalyst to drive us higher? Last week, it was NVIDIA earnings. This week, is it the PCE data that doesn't come in as well or comes in positive? Is it the GDP that comes in negative or positive? We don't know. That's why, for those that are fairly new to this, those that are seasoned, you understand why this data is so important, is because all the signals are telling us that we need that healthy pullback. But until we get some type of catalyst in one direction or the other, we're just going to chop around back and forth, and then it's going to catch some people slipping. All right. So definitely risk to reward is on the downside based on just where we're sitting. Okay. So all that being said, the fundamentals, make sure we go over where we're sitting from last week, our economic calendar, and our fear and greed index, where we're sitting right now. Okay. So let's jump into where the money is made, which is the charts. Okay. The charts are where the money is made. Now, it's important to understand how the charts are correlating with that fundamental news. So you'll see here, if you're new to charting, we do have some, again, a reminder inside of our community. I have trainings over that. I may be releasing some of those trainings onto this YouTube channel in this particular category or playlist of trading or investing. So let me know down below in the comments if you would like some of those trainings released silently onto this YouTube channel. Okay. Jump into where we're sitting. All right. So we're sitting in extreme greed. Remember that. We see a couple of signs here. We're seeing kind of this shooting star wick up here on this Friday, last Friday. And we saw that we touched up to 510. We couldn't close above that 510 range. And we started to see some selling coming in pretty aggressively here. Okay. We have a really nice demand or support area right here around this 503, 504 area. Okay. So I want to pay attention to this nice demand here at 503, 504 for a potential relief bounce. Okay. Now, this would mean for those that trade, meaning calls off this area. So I'm looking at a relief bounce off of here, and then we may push back up and create what we call a lower high. All right. So here's how it would look from a candlestick standpoint. Maybe we push up off of that area, still stay strong. Bulls want to hold the market up. Now, if we can't hold this 503 area, we're coming back to 500, 501, and then we may even come back to that 498 area. Okay. So I'm looking for that push back up to potentially go short again, right? For a nice risk to reward ratio. All right. And here we go right there. Nice push back up into those lows. If we break below and we push back up in that 508, 509 area, I would love that little relief right there for that 508, 509 to short it to come back down. All right. So maybe we get a little relief right there. And then we get a nice candle that pushes us even potentially lower. Now, this might not all happen tomorrow. We may consolidate a little bit leading into that data. So it may not happen until maybe Tuesday or Wednesday leading into that data. So I am looking for some consolidation, maybe low volume, a little bit of trickery or fake outs tomorrow, Monday. And then we will see how we continue. So my risk to reward, what I'm looking for on SPY, as far as options, is I will be looking for weekly. I just want to go out a week, and I'll be looking for this potentially on SPY down to this 500 put out of the money. If we can get something in the money, I'll be looking at this 505 or 503. Okay. Just risk to reward, keeping it nice and simple, and maybe being able to just swing that if we do have some profits, taking some profits off the table and then swinging maybe a contract or two into some of that data. All right. So we'll see. We'll see. I usually don't like swinging contracts into data, but if the signs are telling so, I may, swing a contract if I have already trimmed some profits and swing a SPY or QQQ further out. Okay. Let's jump into QQQ. Now, one thing to mention here, where is the weakness? Okay. We're still strong in this trend channel. If we start breaking below on SPY, that 498 level, we start getting out of this trend and we start really seeing solid candles form below that 498 level, right? We have another demand at this 493, 492 where we bounced off last time. So keep an eye out for that. The big trend on the downside is if we start breaking below 490, 489. Okay. Until we really get that, I think that's when we'll start seeing more massive selling and volume. The bears are going to start taking over pretty heavy, and we may come down with that catalyst all the way back down here. And that's where that true reversal starts to happen back in this 475, 474 area. All right. So that's what I'm looking at. Still not bearish just yet, but that bullish sentiment is the bulls are holding that thing up strong. There just needs to be a news catalyst or something to happen for the bears to really take control. All right. So there's my analysis on SPY. QQQ a little bit weaker. Obviously, all of tech is at all-time highs. This is expected with NVIDIA earnings, people trimming their profits. Obviously, NVIDIA has just been absolutely on a tear. So I am looking at QQQ a little bit more on this downside as tech is a little bit weaker. Remember, SPY, right, has been held up not only by tech, but finance being strong, retail being strong, as well as some airlines being strong right now. So that is why SPY is just, to me, it's just got more going on with it. Tech, a little bit weaker here. Okay. So what I'll be looking at for QQQ as far as a specific trade this week is looking at this pop back into this 438, 440 area. If we can get that pop back into there and then short it from there, and that'll create almost a triple top here. 1, 2, and then a third top there. But we already have a nice double top forming right here. And we can see that it's significantly weak here. So risk to reward, I like a little pop back up in this 438 and then short. Or if we just get a nice downtrend and we start breaking below this 435 area here, I like that for a nice break and a retest. So it would look very similar on the downside. Nice break, retest again for another downside there. Okay, so I do want to short the pops. Okay, I do like that sentiment we got from Friday. I do want to short the pops there. You can look on the upside, right? We're still in a bull market. So remember, for those that are newer or those that are inside of Leverage University or trading floor, all of the things that we got going on, remember, when I'm playing puts, okay, or we're playing against the overall market trend, you want to be mindful that there's going to be an imbalance, right? There's going to be more bulls, more bullish people right now because every dip is getting bought up. So if you do decide to play on the downside puts, please make sure to trim your profits a little bit faster than maybe you would for your calls on the option side. Okay. So just trim your profits, leave a runner, trim your profits, leave a runner. All right. So if you do decide to take a bounce, okay, I like the bounce here on QQQ. If we can come down here into this 429, 430 area, I do like a relief bounce off of there, right? So I do like a relief bounce off of this 429, 430 area. Maybe it bounces a little bit early, but I like that psychological level right here in this nice demand area, 429, 430. Okay. So I'll be looking for that from a relief bounce. So if we push down into there, okay, I'll just be looking for a nice call position to take it back up. And then we can look to short again. So play the range. We're just in a range bound market until we get a catalyst. All right. There's QQQ. All right. Now, if you're looking for specific options for those that are curious, okay, again, for a nice day trade, nice easy trades on QQQ, if you're looking to trade that, if you trade it often, please be mindful for my newbies, anyone that's new. If you don't know how to do this, just watch, right? Just watch. Options, again, are risky, but it is with strategy, okay? I'll be looking at this out of the money. I like this open interest here. These could move really nicely. These 430 puts, okay, for end of the week. Those could be really nice, especially for anybody that, most people can afford 128 bucks, even with a small account. That's still really nice there. And it gives you enough time to take your nice day trade and take a profit. Okay. So that looks pretty good there. If you want to have a nice, easy trade for those that like to scalp, quick traders, I like these 2 days out here. You could do 0 DTEs, but at least a day out on QQQ. And we could look at potentially in the money here, 438, 437 puts right there. All right. So that 438 put, 437 put, we could look at those. All right. Let's jump into IWM. Okay, we're going over all the indices here. IWM. Okay, this is the small caps when we're mentioning again the Russell 2000. Okay, so SPY, QQQ, Dow Jones, obviously, or DIA for the ETF. And then we have the Russell 2000 or IWM. Okay, just for those that are wanting to know, IWM I like. Okay, IWM I like. It is again a little bit weaker, right? Didn't have a really good week, kind of traded sideways and consolidated. But this is what I was talking about for the big money, right? The big money to potentially move into some of these, right? So let me make my face a little bit bigger there. So again, big money maybe moving into small caps, big money maybe moving into crypto with the halving coming up. We'll go over that briefly. So please be mindful of where the money is moving out of, which potentially could be big tech, moving into retail, moving into healthcare. And then we'll see how the data comes out. Maybe finance continues to run if data is in favor of the financial sector. Okay. So you're starting to see now how this is correlated to the charts when we're looking at a lot of this data. Okay. There we go. All right. IWM, I like here off this 196, 197. If we can hold up this 197 demand, I like it back there. I like it for a bounce for calls. Okay. I like that demand area there for calls off of 197. Now, I need to see a wick. Okay. We react. We don't guess. We're not gambling in here. I need to see a wick down here at this 196, and I'll take a reclaim of 197 and take that back up potentially to 200 and retest that high. All right. So I want to see a wick. All right. And again, I'm giving examples on this. It would look very similar. All right. Push down, lower high, wick down in there. Very nice double bottom, and then take it back up for maybe a nice inverse head and shoulders there. Okay. So I want to watch this week. But again, very heavy data week. So I want to make sure that I am in and out of my trades until confirmed otherwise with the data. Okay. So tomorrow could be really nice with IWM. Really nice, easy trade. I think tech could be a little bit manipulated, but I do like some of the plays that we'll go over individually on the equity or the specific stock side. All right. Good. Give me where you're tuning in from down below. I'd love to hear where you're tuning in from, just so I know where you're active, what state, what city. Love to hear. Put it down below in the comments. And thank everybody for being here. Give a thumbs up on the video if we're serving you thus far. And yeah, hopefully these educational market analyses and these trades help you out. If you made money with us before and you're still not in the community, please let us know down below. Like, hey, I'm not in the community, but I made money with this information. All right. Let's jump into a couple of tech that I do like on the downside. Microsoft is very interesting. I do like the formation on Microsoft, this nice head and shoulders formation forming on Microsoft for these lower highs that may form here. So again, this is very similar to SPY and QQQ. Tech fairly weak here coming in, but overall strong, right? Short weakness in the short term, strong in the long term. Okay. So when I look for Microsoft, if we push back up into this 411, 412, I'll be looking to potentially short that for a nice, easy trade. Or if we get down below, I'd rather just let this fall. I'd rather it push up to catch a put option on it. I really don't want to chase it down here on this breakdown just because we potentially could bounce. So I'd rather just let it fall and then take a relief bounce off of that 402, or it may hold this 405 in this gap fill and see where SPY is correlated at the time. All right. So right there at that neckline, may get some relief off that 402, 403 area. Okay. So I'll be looking for that on Microsoft. I like trading Microsoft personally. And also I just like how this formation, nice head and shoulders just to push down. So I'd like one more test up and then take it down. All right. Meta, very, very strong here. Okay. One thing I wanted to show as well on SPY is we didn't mention it here. For those that are a little bit more seasoned, you'll understand this. We do have this bearish divergence here on a daily. Okay. We do have this bearish divergence on a daily. And all that means is we have lower highs on the RSI, or the relative strength index. And then we have higher highs that are trending upwards on the actual index. Okay. So you see the correlation there, higher highs, lower highs. This is what we call a bearish divergence. So this is a sentiment for a short-term downside. Okay. That is why we're just building a case and trying to see which direction we may particularly trend and where the risk to reward is. And in my opinion, and for those that understand and see what I'm seeing, the risk to reward is definitely on the downside for my short term investors or traders. Now, again, undeniably strong, right? But in the short term, we're due for a healthy pullback. We just need a catalyst. So we're just watching, trying to see, and we're managing our risk. Okay. Meta, okay, still strong here, but we're coming into this ascending triangle. That's what I'm seeing here. We're just coming into that ascending triangle there, which could be, right, a nice bearish sentiment again, right? A little bit overbought here on the RSI, right? Made a great move after earnings. And then we started to see a little bit of wicking here coming up into this area. If you see there, pretty massive selling there from Friday. And then we're coming into this ascending triangle with a couple of gap fills coming in. So I do like this. I'm still very much bullish on Meta, right? This gap may get filled. It needs a news catalyst, in my opinion. It's just so strong. Every dip is just getting bought up, but we could fill this nice little gap here back down to 470, which would be a nice $10 move, which is pretty easy for Meta to do and then recover. Right. So I'll be watching out for that on Meta, holding up that psychological level of 470 and see what we do from there. Okay. Again, tech, not too interested on the upside right now. I need a deeper pullback or, push back up in the highs and short it. All right. Again, Tesla, for all my Tesla lovers out there, nice inverse head and shoulders. Again, nice push down, consolidation. We tried to push out of this trend here. Inverse head and shoulders worked out. It just didn't form any continuation on the upside. So it's now retesting, broke the neckline here of 196. And now it's coming back into this consolidation phase right around this 190 to 188 level. All right. Now, this is a good time to purchase Tesla shares, pick up Tesla shares. Obviously, not financial advice, but we are in consolidation. We've got this nice bullish divergence here coming on the RSI on a daily, right? Nice little bullish divergence starting to create this consolidation, right? Lower highs there forming on the downside, just continuously pushing down into consolidation. And then we're forming this nice higher lows on the RSI. So I love Tesla right now, picking up shares of TSLL. Okay. If you do not have the budget for Tesla, underneath $10 would be great. If it can fall down into $8, even better. Picking up shares of that. Or if you decide to do long-term leap options on TSLL, you could, right? Coming out here. I don't really like how this 73 is here. So maybe not, maybe so. But yeah, definitely shares of TSLL. But if you want to do options, maybe coming out to June, something like that. But we are due for a pretty healthy pullback. So who knows? Maybe just shares right now, and yeah, just ride the shares out and then just day trade. Now, if you want to consider options, that's awesome. I think it's a great upside. You just have to be comfortable with the fluctuations back and forth. All right. Let's jump into Apple. Apple's got their shareholders meeting on the 28th. Okay, so that will be on Wednesday. Okay, Wednesday. So Wednesday with data and the shareholders meeting. I do want to keep an eye out for Apple. It has been looking fairly weak here, creating these lower highs, trending down just like that. Oops. Let me get this RSI off of here. There we go. Move me out of the way. So I do want to watch Apple. I'm watching for Apple to just break this trend of 179.50, right? Once below 179.50, ideally below 180, but hey, it's Apple. It could get bought up very quickly. So I want it as far as trading goes. Okay. So when I'm mentioning these levels, anytime you have a dip like this on your favorite companies, you're more than welcome to dollar cost average. But from a trading perspective, right, I want it below 179.50, and then we can short it down in this 177, and the bears have taken over in the short term. We could get some relief off this 176, 177 level. Okay. So I want to keep an eye out for Apple breaking down underneath that 180 and ultimately that 179.50 for puts. All right. Let's jump over into a couple others. Google, for those who have been following us for a while, Google still looks fairly strong, right? It's creating these lower highs here, but it's ultimately been lagging behind all the other big tech. So, as far as tech companies go, I personally like Google a little bit more on the upside in the short term, just because it's holding above this 138, 140 demand area. And it's just creating these lower highs coming into this nice triangle here to potentially break out or just hold and consolidate, right? So just keep an eye out, just be a little bit mindful of these. But as far as the tech companies go, personally, I like Google as far as, maybe a potential swing we've been talking about or just day trading it in general. All right. Let's jump straight into, in my opinion, the sectors that have been moving very nicely to the side. Big tech, overhyped, a lot of news, a lot of sentiment around it. Obviously, it's really, really bullish, and everyone's wanting to get into the game, right? That's awesome. But what about some side players here in the retail space that's been moving really nicely? Walmart is coming up on their stock split, had an amazing earnings, and forming this nice bullish flag here for Walmart. Now, what I would love for Walmart is break above that 177.50 level, ultimately that 177 level, holding above, nice break and retest, and then take it back up to these highs of 180, right? So we'll see how that looks. I really like this move off of this 173 level that we talked about inside of our Discord, but it's creating this nice lower, it's gonna be a higher low, right? Higher low trend right there. So Walmart, keep an eye on that for a nice day trade. The trend back up to that 178, 180 level. Okay. So a little bit tight room there. I'd rather it pull back personally, but could be a nice short scalp right there. Target. Target has been absolutely ripping. Okay. Ripping ever since it broke out of this 143 level and retested it. So see here that Target broke out of that 143 level, broke out, retested, and then shot right back up. The retest level now that is broken out of, I'd really love to see Target pull back into this 148, 150 level. Okay. 148, 150. Okay. If it holds up that 150, that's great. But ultimately, I like it better back in this 148, 149, kind of ticking down into that level there and then taking it back up. So Target looks pretty good. Airbnb, we talked about this on my live and it worked out tremendously. A lot of people made some money on Airbnb when I mentioned it on my Instagram live last week. I talked about Airbnb holding up this nice 145 level, which was a demand, right? Former resistance, right? Nice break, retest, hold that level, and then take that off of there. Now we've got this nice trend line forming on Airbnb. So now I would love it back at this 149, 150 level. Fill that gap maybe this week with the nice pullback, filling that gap and pulling back there to take it long to retest. So options wise, I would come out here. Obviously for Airbnb, not obviously, but for Airbnb, something like that, I like coming in minimum of 30 days out. That March 15th looks pretty good for open interest and the volume on those contracts. They are fairly pricey, but that 165, it is out of the money a little bit, but I like the price on it. And then ultimately, in this June 21st date here, are also some good options. Okay. They are pricey. Let's look. Yeah. So Airbnb is one. Uh, Disney's something I've been having my eye on. It's been fairly weak, kind of starting to fill this gap, right? Obviously, Disney is still strong, but it's been weak ever since it got up to this double top of 112 and then it's pulling back to that 107. This was their earnings move, so not surprising here. So I do want to watch Disney as well below this 105, just below those lows. All right, start to break below those lows, that 105, 106, 105, 50 level. Then we can start getting some action happening back into that 100 test. Just fill that gap and then take it back up. Right. So keep your eye on Disney. Could be a nice, easy trade for a gap fill with a news catalyst, or we just trend downwards, but still strong. Again, if you look here on this daily, you could see this as maybe a hammer candle. So again, could get some relief and push back all the way back up into 110. All right. UPS highly on the list here. I love this chart personally. Their earnings not too great, but they've been recovering really, really nicely here and is slowly just treading back up. So this yellow area here is the demand that I'm looking for. 148, 147. I would love that. It's already sitting in after hours at 148. So I'd love this 147, maybe even 146 area just to take it there and then take it for calls off of that 146 area. Now I'm reacting, right? So I want to make sure that I see a wick, kind of like what you see right here, wick into there, and then take the calls back up, especially since the market is fairly weak, okay, in the short term. All right. Jump into a couple other plays that I'm looking at. Moderna. Moderna had great earnings, right? And now it's just doing a break and a retest of that 95 level, that nice demand area, just kind of bull flagging into there. All right. So I love this area here on Moderna, that 95, 96 area, just to take it back up to highs potentially and just take out that high to tread higher. Okay. On the upside, if you look for it to just take out these highs, would be 102 if you want a psychological level, or 150 would be that level. That 150 level there would be really nice on Moderna just to take it out. Okay. Earnings play, and then I'll start wrapping this up here. Earnings play that I'm potentially looking at this week that I think could be really nice. There are obviously some other ones that I'd rather trade post earnings, may do some lottos. We only recommend those lottos inside of our community. So I'll call those out if I am in some. But Snowflake may look at the contracts there. CRM may look at the contracts. They're probably going to be elevated. So I just want to stay away from some of those until after their earnings report, and it should provide some nice trading opportunities. But as far as a lotto goes, with little low risk, potentially high reward, could be a Celsius. So I do want to take a look at Celsius for their earnings and see how those contracts are looking up into this 70 psychological level. So I'll take a look at those to see how they're moving throughout the week. They kill their earnings, which it looks like they may. Nice hammer candle forming here, and then maybe taking out this high coming up here to this resistance, and maybe their earnings takes it above there. So we'll see. We'll see. Let's jump on a monthly. So yeah, Celsius is at all-time high. So it could create new all-time high if they absolutely blow their earnings out of the water. So we'll have to see and wait, but I will be looking at Celsius for their earnings. They've just been absolutely killing it. Broken out of this nice wedge. And then if their earnings continue, then yes, we could come back up and we'll be in the 70s. Okay. Um, make sure I go over everything before I finish off our last piece, which would be Ionic, which I think is a great example of how to go over a full analysis of a company. Let's look over crypto. Okay. Really quick crypto analysis. Ethereum. Okay. Heading into the Bitcoin halving. For those that don't know what that is, research it, do your due diligence, Google it. Bitcoin halving, shortage of Bitcoin production. Okay. Which makes it more in demand, which makes the price shoot up. Okay. Happens every 4 years. So if we look at Bitcoin back in 2019, going into 2020, here is the consolidation, just the buildup into the halving. Nice little pullback there. And the halving typically happens in April and May, and then continues for about a year to a year and a half. All right. So look what happens here. Last halving we had with very little data and use cases for crypto. It was all hype. Right. So we came here, consolidated, and then we just absolutely ripped into the halving. and we went from $9,000 all the way up into 63,000. Now, we're starting to prepare here for the halving yet again, 2024. So people were preparing 2023, grabbing up this dip here, going into 2024 halving. And then again, remember, just like 2019, 2020, this nice little pullback before the halving that went from 9,000 down to 4,000. Now, what we'll be looking for potentially on Bitcoin is for it may not have that massive pullback, right? Because it's so strong and there's so many use cases. It may only pull back to the mid 40s, right? 40,000. So if we get that, that may be the only pullback we get, right? But ultimately, if we get the pullback that we want, and it won't be one massive red candle like that, right? But if it's on a monthly, then maybe, who knows? Right? We could get this candle that comes all the way back down to those low 30 ranges, which will come right on this trend line. It would technically be maybe a fourth touch, 1, 2, 3, and then this fourth touch just could catapult us off of this 31, 32 area, and then we just absolutely rip off of there. Okay. So be on the lookout for crypto heading into the halving the next for end of 2020, going through 2024, and then all of 2025. All right. So you heard it here. And also, I'm pretty sure there's other creators and educators out there that are talking about it as well. All right. Ethereum, same thing, ripping above this 3,000. Ethereum has been looking really, really good comparative to Bitcoin, a little bit lagging behind, which is a good thing, right? So Bitcoin kind of made that massive move there. And if you look from a charting perspective, Ethereum chart looks almost the same, but it hasn't really retested this high that Bitcoin did, which was right around that 47, 48,000. Ethereum, if those ETFs come out, Ethereum ETFs, that could catapult it, but it's doing it on its own, right? It's just absolutely ripping on its own. So we'll see. It wants to go to this 3,500 psychological level, ultimately 36. So shall see. Mara, this is what I was talking about for this week. So Mara reports their earnings this week. Okay. On Wednesday after close, Riot, okay, its sister or brother, okay, counterpart, reported their earnings last week. I think they slightly missed. Don't quote me on that, but the response from a technical basis really wasn't that massive. Okay. So had a little response here. Went from 14 to 15, about $1.50 move, which is pretty good for Riot. Mara just bull flagging right here into their earnings. So if they absolutely kill it on their earnings, we could see Mara back up to 30. From a technical basis, it somewhat looks like a nice cup and a handle formation. Again, for those that need to be reminded, okay, that is a bullish sentiment here. Okay. Now there is a news catalyst, which is their earnings. So this structure might just get absolutely just thrown out the water, right? But it's something to just pay attention to, right? Nice cup, handle formation, pullback, and then rip. Okay. Nice cupping formation here. Nice handle maybe forming and then rip. Okay. So do want to pay attention to that, maybe leading up into their earnings. Okay. So it's already kind of breaking out of this downward trend here. And with Ethereum moving, Bitcoin holding above 50,000, right? We could see it just consolidate until their earnings, right? It may just move sideways until its earnings, until it decides it wants to rip above 25 again. And then we'll take off. Okay. So there is Mara. So my main watch this week, to summarize this, and I'm going to end off with Ionic, which I think is a great example of how to analyze a full company in 5 minutes or less, is the downside of SPY, QQQ, IWM want to watch for the upside a little bit more. And then we have a couple of names that I may be looking to play on the downside. Apple below that 179.50, Microsoft for shorting, okay, or puts for those that don't know the terminology, shorting Microsoft. And then on the upside are looking at some of the retail names and then also the post earnings trades this week. Okay. So let's jump into Ionic. Okay. This is kind of that sleeper, and I don't think it's a sleeper because people may have already known about it, but we brought it up. Okay. So first of all, I'm going to do a 5-minute analysis around this company to show you why it may be a potential good trade and why maybe they may kill their earnings. Okay. Let's first jump into Ionic and what sector they're in. So that's the first question you want to ask, what sector they're in. They're in the AI, cloud computing, quantum computing space. Okay. Anything dealing with technology, quantum computing, AI, artificial intelligence, moving the vision of the future forward. Okay. So a couple of things I saw in here were partnerships in the cloud space of AWS, Google, and Microsoft. That's the first case that I'm like, okay, cool, piques my interest. NVIDIA also reported that they have been partnering with Ionic. So I was like, okay. And don't quote me on this, but do your own due diligence. I do believe that NVIDIA as well had some stake in Ionic too. So I do believe they have some stake in Ionic. So that is something that piqued my interest yet again. All right. So let's jump into their financials. Okay. Their financials look pretty good as well. Okay. So continue to increase their revenue. Next thing I want to go to is their net income. Are they profitable? Not yet, but they're headed towards profitability. Now, you might look at this and you're like, okay, where's right here? So they went into a little bit of debt here. Obviously, that was 2021 coming out of 2020. And then they recovered really nicely here for their net income right there. A lot of sales came in, increased their sales, and then ultimately they're coming here. And then what is the key factor to summarize all of this is how much cash they're sitting on. Okay. Their working capital on the balance sheet is continuing to increase. So they have a lot of cash they can operate on, even with the debt they're increasing. So, in my opinion, right, that this analysis of the company is number one, I expect them to be in debt because they're innovating. Number two is that they continuously have working capital that they're holding on to and they have cash on the side and they're partnering with major companies in the AI and tech space that have even more money. I'm like, okay. And then the final straw is this chart. First of all, I like the movement back and forth, right? It's not too choppy. It's nice movement. So that means there's activity and volume and volatility going on with this. This went from $3 back at the end of 2022 and ran all the way to $21, right? We're looking at a 621% increase in 266 days. So less than a year, you're talking about almost 1,000% increase. That piques my interest. Now we are pulling back into this nice consolidation area leading into their earnings. Okay. Pretty much almost back into their IPO, which their IPO looks like it came out right at about $11. And they're sitting just below their IPO price. And they're coming into this nice consolidation. Right. So I like this a lot. Probably going to be picking up some shares this week, as well as maybe even a leap option on it. Not even day trading this. I'm not even trying to do um, a lotto on this. I'm just going to come all the way out here to January 2025, be looking at this potential 20 call here for Ionic. This 20 call, even the in the money is not that bad for $300, but I can grab two of these, maybe three of these right here at this 20 strike, and then take it for another year ride. Okay. So I do want to take a look at that. You're more than welcome to look at the 15 strike or in the money and just take the 10 strike. But I do like this Ionic for just leaps and just leave it alone. All right. So all that being said, right, let me bring me up again. Okay. bring me up again here. There we go. Thank you all so much for tuning in to this market analysis. Hopefully it was beneficial to you. Again, reminder, do not disregard the links down below. Please make sure that you join our community. We do have a trial period as well as all the other links if you need individual information. Again, my name is Dr. B. Peace, love, and blessings to you. You'll have a great week. Trade safe and be the best version of yourself. Be 1% better. I'll see you in the next one. Peace.